Good morning. This paragraph in the Wall Street Journal summarizes common complaints that we hear from Western governments and large Western companies who are trying to compete against Chinese firms. China provides lots of government assistance to their industrial sectors. As a result, Western businesses are outclassed in electric vehicles, solar panels, batteries, and everything in between. And emerging market countries cannot compete against China's low costs and operating efficiencies. That's the thesis, and it is popular. And when we see articles and research like this, who is it written for and who is it written by? Because politicians and officials in North America and in Europe are not against subsidies to help our own industries. They brag about how much public money they're giving to auto companies or to semiconductor companies. They boasted about all the money they pumped into the banks during the great financial crisis. So let's understand that when these think tanks put together this research, and some of them are quoted in this article here, the CATL Institute, the CSIS, they're think tanks that are paid by governments and by some of the biggest companies in the world to do this research so that it can be used to justify more subsidies, more taxpayer money being spent at home. And what they're saying here is that China is giving a lot more money than we are, so we need to do the same. That's how they get paid, and that's how our politicians get elected, by giving money away to companies that in turn contribute to their campaigns. That's our system. And as we go through the data, it's important to keep in mind two important things. The Chinese are able to subsidize their industries in ways that we cannot because they're making a lot more money. Chinese subsidies to their industries come from trading profits earned throughout the world, from the United States and Europe in particular. Subsidies to American and European industries need to come from taxpayers or from borrowing, loans which will be repaid by our taxpayers. That's a crucial difference, that China is playing with house money, reinvesting profits. We're not. The second thing to remember is that it's working. If the Chinese were wasting their money, were levels of Chinese malinvestment very high, it wouldn't matter. Never interrupt an adversary when he's making a mistake would be the thinking in that case. But they're not wasting money. They're reinvesting in their own industries, which grow faster as a result, and they're taking over ours. And there is another issue, which is that as we go through these criticisms carefully, they don't measure up very well. The Wall Street Journal reports that hundreds of Chinese companies receive subsidies from the Chinese government. The largest recipient for last year, 2023, was CATL. They are the world's largest battery maker. CATL batteries are in millions of electric vehicles. They received 5.7 billion yuan, which is about $790 million in subsidies. That seems like a huge number, but in 2023, CATL's revenues were $55 billion. In renminbi, CATL's profits were 44 billion yuan. That's profits. CATL is a Chinese company, and they have to pay taxes on that 44 billion RMB in profit. And the Chinese government handed them 5.7 billion renminbi in subsidies. That would not be considered unusual at all in the United States, for example, where companies put factories based on how much local tax incentives they can get by moving to Alabama, say, instead of Georgia. That's done all the time. Here are the types of subsidies that Chinese companies get. Cheap loans from Chinese banks, tax breaks, cheap land from local officials to set up factories, cheap steel, cheap raw materials generally should say, cheap electricity, and access to venture capital funds that have government funds in them. The only thing that seems uniquely advantageous to non-Chinese would be the government investment funds. They explored a bit here. Chinese government-controlled funds to provide equity finance. They found 2,000 funds in China, and some of them have billions of dollars to lend. But this is actually a feature of our economic systems too. For example, CalPERS is the investment arm of the state of California's municipal workers, just one state. And they have over $500 billion under management. And lots of these investments are directed at private companies inside the state of California. The CalPERS funds, according to this report, have $467 billion under management. And California has another giant fund for their public school teachers, CalSTRS. There's $350 billion in that one. The Government Investment Fund for School Teachers in Texas has $187 billion. Most countries have public pension funds or sovereign wealth funds that serve the same purpose. These are investment pools run by governments, usually with two explicit directives. Make investments in local industries and companies, and make profits, which can be used later to pay benefits. Chinese government-backed investment funds channel billions of dollars in equity financing to companies that need capital. Yes, and so do ours. The CHIPS Act in the United States set aside $53 billion. All of this was borrowed, by the way, and the Inflation Reduction Act promises lots more than that. It adds up to a lot, but compared to China, not really, it says here. China's in a different league. $250 billion in 2019, which is around 1.7% of GDP. South Korea's half as much, US a quarter as much. Now the US, Japan, and France all run large trade deficits, and all that spending on industrial policy comes from taxpayers, all of it. Here are some other examples that they found, the biggest recipients of Chinese subsidies. PetroChina, the biggest Chinese oil company, got $343 million. CRRC makes railroad equipment. They got $214 million. That doesn't sound like a lot of money to me, honestly. Amtrak is a U.S. railway. Their federal grants, not loans, were $2.4 billion, which is 10 times what the Chinese railroad equipment company got. Stands to reason that China, which hauls in millions of tons a day of raw materials that need to be moved from port to factory, then finished products moved from factories back to the ports, would need the best railroads to make all that go. Having the best supply chains need best-in-class logistics. The state of California spent billions of tax dollars for a railroad, and we don't even have a track yet. So I don't see the purpose of pointing out China's subsidies to their rail system, except to emphasize our own failures in that respect. I got a big problem with this too. SMIC is a huge company here in China. They make semiconductor chips for Huawei and lots of other companies. And they were singled out in this report because they enjoy below market borrowing rates. In 2023, SMIC paid an average of 2.1% on long-term borrowings, which is lower than the 5-year lending benchmark established by the central bank. The European Commission seized on this point and says that some firms are using new loans to repay old debts, which in most economies would be the sign of a risky borrower. That is completely false. It's the sign of a credit-worthy borrower, that they are offered lower lending terms than before, so they take it and refinance at lower rates. That's literally what every single corporate treasurer in the whole world hopes to do, what every single homeowner with a mortgage hopes to do when interest rates fall. Who wrote this? I seriously want to know who works in or for the European Union who doesn't know what an interest rate is. Do they actually think that banks want to lose money by lending at lower rates instead of higher ones to risky borrowers? Anyway, SMIC is one of China's most important companies, and it's enormous. It should not be surprising that they can borrow at lower rates than other companies. This is a prospectus from Apple. It's a few years old, from 2018, and it's for $7 billion in new borrowing. They're borrowing $1 billion at 1.7 for 4 years, $750 million at 1.8, $2 billion at 2.05. On down. Finally, it's $1.5 billion at 2.95 for 30 years. Apple Computer's borrowing on this tranche of bonds works out to a duration of 12.4 years at a volume-weighted yield of 2.2%. SMIC is at 2.1%, Apple's at 2.2%. These data and analyses are put together by think tanks and public policy institutes, same thing. So remember who is paying them and why. SMIC is a foundry that makes semiconductors here in China. And we want to rebuild that industry in the United States. But that means that our new companies need to be able to borrow capital the same way Apple does, and the same way SMIC does, with a 2 handle. But that's a serious problem for our officials and policymakers, because SMIC can borrow at rates below even the United States government. We pay a rate twice as high for borrowed capital as U.S. taxpayers financing our government operations than SMIC does. So our lawmakers who hope to build out a semiconductor industry in the United States, they need to subsidize loans to our chip makers in this case, and to lose money on those loans, deliberately lose money. The think tanks and institutes are not making the argument here that we shouldn't do it because it's a bad deal for U.S. taxpayers. They're saying the opposite, because that's how they're incentivized. That's why our biggest companies give them millions of dollars a year. It would obviously be too self-interested for a billion-dollar U.S. company to write an article in the Wall Street Journal that asks for billions of dollars in low-interest loans or free money from U.S. taxpayers. So they pay the CSIS to do it. These reports are not written to inform because the information isn't very solid. The reports are not intended to be used by investors or by business managers deciding where to buy products from, or global executives deciding where the next factory should go. All the people Wall Street Journal pretends to be a newspaper for, this article is not for them. It's not for us. It's for companies in North America and in Europe who want subsidies themselves. And they need lawmakers in North America and in Europe to have a reason to give them the money. Companies toss some of that money back to those officials and bureaucrats in the form of campaign contributions or jobs, and that's the cycle. This is Sichuan province, the countryside. Be good.